Welcome to our channel Practical Study Planet. Please subscribe our channel if yet not subscribe it and press bell icon for further updates. Today our accounting lecture 5, Bank Reconciliation. This is most important and precious lecture. Please be attentive while listening over this lecture. The first topic will be why and what is bank reconciliation. Practical view of bank statement and cash book. How to prepare bank reconciliation statement. What after and use of bank reconciliation statement. Let's move to the detail why and what is bank reconciliation. Nowadays, mostly business deals with the bank account apart from cash at offices. There are always two records while dealing with the bank account. One in bank, banker maintains record in a sheet that is called bank statement or passbook, while one record is kept with the accountant in account office of each banking transaction, either issued check cleared, received check deposited, or cash deposited into bank, or cash withdrawal from bank, online transfer issued or paid extra in a ledger that is called bank account ledger or cash book. There is always chance of mistakes or omission, discrepancies, while these two records simultaneously maintained at two different points, bank statement passbook and bank account ledger or cash book. The process of finding the statement, the discrepancies and bank account. The process of finding the discrepancies, error, omission to balance the bank balance as per bank statement and in a bank account ledger is called the bank reconciliation, and the statement to be prepared in which discrepancies are adjusted to get the final accurate bank balance is called the bank reconciliation statement. Now we will see the practical view of the bank statement. This is example. You can see there is a bank header at the bank name at header side with the account details, the account title, account number, account type, and the statement period will be mentioned over the bank statement, and there will be the date and particulars, references, withdrawals, debit and credit, and balance. This is the statement for the month of Jan, from 1st January to 31st Jan. This is the bank statement which is prepared by the banker, normally to issue to the company. And one record is maintained by the accountant in the company offices, that is another one, bank account ledger. That is also called the cash book. There are some transactions are mentioned over there. This is the practical view of the bank ledger. See these, keep in mind and all transaction carefully. This will be discussed in our example to prepare the bank reconciliation statement. We will discuss one by one because we need to check and clarify the discrepancies. Now, how to prepare the bank reconciliation statement? There will be the two steps. The step 1, first of all we will compare the both statement and analyze to find the discrepancies in the bank statement, passbook and the cash book in bank ledger. In above given example, we can compare above two banking transactions record, passbook and cash book, and find the following discrepancies. Date is 2nd Jan. The 1st Jan transaction is okay. because there is no discrepancy. Same amount is deposited and recorded accurately in the bank ledger also and the bank statement. So there's no differences. The tallied balance will not be considered in the bank reconciliation, and only the discrepancies and differences will be discussed and highlighted in the bank reconciliations. So the first difference, we found that the cash withdrew 2000 but recorded in cash book 1800. The difference 200 less recorded in the cash book. The second difference we found out like that on the 3rd Jan, cash deposited into the bank 7000 but recorded in cash book 5000. The difference 2000 less recorded in the cash book. The third discrepancy on the 4th Jan, bank debited withholding tax 25 but in cash book not recorded because no information conveyed to the accountant. The fourth discrepancy, the 5th Jan, interest on investment credited by bank automatically 587 but in cash book not recorded because no information conveyed to the accountant. Maybe some investment done by the company through bank, so the automatically interest received on that investment and bank automatically crediting. So while receiving the actual statement, then accountant come to know that that has been credited. So that's why this interest showing credit balance in the bank statement. The 5th discrepancy on the 5th Jan, check number 0123 amounting to 2000 issued by the accountant and posted in the cash book, but upon receiving the bank statement it came to know it is not cleared from the bank, might be not presented by the creditor or returned due to any reason. So that is also one discrepancy. The number 6 discrepancy, 6th Jan, accountant deposited one check which received from maybe debtor 58879 amounting 4000 and posted in the cash book, but it didn't appear in the bank statement, might be rejected or dishonored in the bank due to any reason. The 7th discrepancy on the 6th Jan, the bank deducted bank charges 100 but in cash book not recorded because no information conveyed to the accountant. The 8th discrepancy, on 8th Jan, the debtor directly deposited 5000 but in cash book not recorded because no information conveyed to the accountant. 9th discrepancy, 8th Jan, interest on vehicle loan 250 debited by bank but in cash book not recorded because no information conveyed to the accountant. This kind of information only accountants see while receiving the statement. So on 10th discrepancy is there. On the same day, 8th Jan, vehicle loan installment 2000 debited by bank but in cash book not recorded because no information conveyed to the accountant. So these are the 10th discrepancies found in between the bank statement and the cash book. So now we are going to resolve these discrepancies through bank statement. There is a second step of bank reconciliation statement, derivation of accurate bank balance. The first step was the finding the discrepancies and analyzing. We make a list of the discrepancies. The second one is to derivation of accurate balance. There will be the two methods. There is two methods of finding the accurate bank balance by adjusting the discrepancies in a given balance of either book. The first method is addless method, British method. The second method is debit or credit method, American method. I'll prefer this method as whole accounting is dealt in debit and credit. But both methods to know is key to expertise your skills. So before studying any other methods, I will suggest to these points to keep in your mind. The first one, from which book, passbook or cash book balance we are going to use the start the reconciliation. And the second, the base balance is debit or credit balance. Passbook normal or positive balance is always credit balance. Passbook overdraft or negative balance is always debit balance. Cash book normal or positive balance is always debit balance. Cash book overdraft or negative balance is always credit balance. The seventh, I'll always prefer to start from cash book or bank account ledger balance to reach passbook or bank statement. That is the correct way of finding the balance, preparing the bank reconciliation statement. Let's start prepare bank reconciliation by addless method. So the balance we are taking cash book balance, that is 14,200, and there are 4 things to add in this balance and 6 things to less. What is the first one? The cash deposited more but recorded less, so now adding the difference. So interest on investment credited by bank but not recorded in cash book, so now adding, because by adding the balance of cash book will increase. So these credits we receive from the bank, so now we are increasing our balance also. The check issued and posted in cash book but later on found not clear in the bank statement, so again adding in the cash book 2000. Debtor directly deposited in the bank account but not recorded in cash book, so now adding. So the less things, cash withdrew more but recorded less in the cash book, so the 200, now decreasing the balance. Check deposited and posted in the cash book but later on found not cleared in the bank statement, so decreasing the balance in the cash book, now 4,000. Withholding tax bank deducted but not posted by the cash book, so now decreasing the balance 25. Bank charges bank deducted but not posted by cash book, so now decreasing the balance 100. Interest on vehicle bank deducted but not posted by the cash book, so now decreasing the balance 250. Vehicle loan installment bank deducted but not posted by cash book, so now decreasing the balance. So automatically the balance we got as per the passbook. So the balance tally now. So these discrepancies we found and adjusted them by adding in less method. We got the final balance same as per the bank statement. So let's see the another method, that is debit and credit method. This is very simple and easy. We will show the comparison also in our next slide. So there is a 10 discrepancy. First, the cash withdrew more but credited less in the cash book, so the difference 200 will be credited now. So the cash deposited more but debited less in the cash book, so now to debit more 2000. Withholding tax bank deducted but not credited in the cash book, so now to credit 25. Interest on investment credited by bank but not debited in the cash book, so now to debit. And you must keep in mind then what bank is going to debit, the cash book will always credit. What bank is crediting, so the cash book always will be debit that amount. So the check deposited and debited in the cash book but later on found not cleared in the bank statement, so reverse the effect by crediting 4,000. Debtor is directly deposited into the bank account but not debited in cash book, so now to debit 5,000. Bank charges bank deducted but not posted by the cash book, so now to credit. Interest on vehicle also will be debited by the bank, so now we will credit. Vehicle loan installment bank debited but not credit in cash book, so now we will credit. So the final balance will be the same as per the bank statement, 17,212. In both method the balance will be the same. So now we completed the bank reconciliation via debit and credit method also. Now we will compare the two, what is the difference and what is the advantage and disadvantage of the two methods, add or less method. And there is a add less method is, it's looking simple but complicated, whereas debit and credit method is simple, and add less method is traditional, whereas debit and credit method is professional. Add less method is British traditional, and debit and credit method is American traditional. In add less method there is chances of mistakes are more, whereas in debit credit method chances of mistakes are less. Add less method difficult to find if any mistake, whereas in debit credit method easy to find mistakes if any. And in add less method, statement by this method do not tell clearly how to pass the entries to equalize the balance in the books of account, whereas by the debit and credit method, automatically accounting entries defined to pass in the books of account for tallying the cash book balance with the passbook balance. So when we prepare the bank reconciliation statement, then what will the next? What after and use of bank reconciliation statement? When bank reconciliation statement is prepared, the necessary entries to be passed in the books of accounts to tally the cash book balance with the passbook balance. It helps the accuracy of accounts of all cash and bank related transactions, because there are always chances of discrepancy between the bank statement handled by the banker and the bank account ledger maintained by the company accountant. In case of contra entry, contra entry is that one when we are passing the transaction cash to cash, mean head office cash to petty cash like that, petty cash to head office like that, bank deposit to cash, or cash deposit to bank, or bank to bank transfer from bank to another bank. That is all contra entry. Same nature of accounts will used in debit and credit. So there is a chances of discrepancies increase. Thanks for watching the video. Please like, share, comment and be connected with us for such informative videos.